Spotting and trading Forex continuation patterns. Introduction. Continuation patterns are technical chart patterns that suggest a temporary pause in a prevailing trend before it resumes its original direction. For intermediate Forex traders, identifying and trading continuation patterns can be a valuable skill to enhance trading precision and profitability. These patterns signal a potential continuation of the current trend, providing opportunities for traders to enter positions with reduced risk. In this text, we will explore how to spot and trade Forex continuation patterns, highlighting their significance, common patterns, and effective trading strategies. Understanding continuation patterns. Continuation patterns indicate a temporary consolidation or rest in the market trend, hinting that the trend is likely to continue after the pattern is completed. They can occur in both uptrends, bullish continuation patterns, and downtrends, bearish continuation patterns. Common continuation patterns. Ascending triangle. This pattern forms when the price reaches a series of higher lows, while the upper boundary remains relatively flat. It suggests potential upward continuation. Descending triangle. The descending triangle appears when the price forms a series of lower highs, while the lower boundary remains relatively flat. It implies potential downward continuation. Symmetrical triangle. In this pattern, the price forms a series of higher lows and lower highs, creating a converging triangle. The symmetrical triangle suggests a potential continuation in the direction of the prevailing trend. Bullish flag. The bullish flag occurs when the price experiences a sharp upward move, flagpole, followed by a sideways or slightly downward movement, flag. It signals a potential continuation of the uptrend. Bearish flag. The bearish flag is the opposite of the bullish flag, formed by a sharp downward move, flagpole, followed by a sideways or slightly upward movement, flag. It suggests a potential continuation of the downtrend. Spotting continuation patterns. Trend confirmation. Continuation patterns are most reliable when they appear within the context of an established trend. Confirm the prevailing trend before identifying continuation patterns. Volume analysis. Volume can provide additional insights into the validity of continuation patterns. During the formation of a continuation pattern, trading volume should decrease, indicating a reduction in market activity. Support and resistance levels. Continuation patterns often respect support and resistance levels, reinforcing their significance. Look for the price's interaction with these key levels within the pattern. Trading strategies for continuation patterns. Entry strategies. Enter a trade once the continuation pattern is confirmed, typically after a breakout above the upper boundary of bullish continuation patterns or a breakout below the lower boundary of bearish continuation patterns. Stop loss placement. Set a stop loss order below the pattern's lower boundary for bullish continuation patterns and above the pattern's upper boundary for bearish continuation patterns. Take profit targets. Calculate potential target levels based on the pattern size and projected continuation distance. Traders can use Fibonacci extensions or previous swing highs lows as take profit targets. Risk management. Position sizing. Determine the appropriate position size based on your risk tolerance and the distance to your stop-loss level. Avoid overtrading. Focus on high-quality continuation pattern setups and avoid overtrading, which may lead to reduced trading performance. Multiple time frame analysis. To gain a comprehensive perspective, use multiple time frames to analyze continuation patterns. Higher time frames can provide the overall trend context, while lower time frames help refine entry and exit points. Conclusion. Spotting and trading Forex continuation patterns is a valuable skill for intermediate traders seeking to increase trading precision and take advantage of potential trend continuations. Ascending triangles, descending triangles, symmetrical triangles, bullish flags, and bearish flags are common continuation patterns that offer opportunities for traders to enter positions with reduced risk. Confirming the prevailing trend, analyzing volume, and assessing support and resistance levels within the pattern are crucial in identifying valid continuation patterns. By implementing effective entry and exit strategies, setting appropriate stop-loss levels, and employing prudent risk management, traders can capitalize on the power of Forex continuation patterns to achieve consistent profitability in the dynamic and ever-evolving Forex market.